Hi everyone, welcome to GoodStory's mobile market updates. This time we have a special guest.
Hey everyone, I'm actually very excited to be here. I'm a true fan of the show. Sorry Tony couldn't make it, but I'm actually pleased to be here.
Yeah, Tony.
Hopefully Tony feels better. That's the only way they invite me. If someone is sick, I'm just like filling the gaps. Pretty much. Filling big.
Again, if you are not subscribing to our YouTube channel, please click the subscribe button. Anyway, so we're here to bring you a little bit of an update on what's happening in Ottawa's real estate market. We'll just go over the amount of properties sold. It was actually quite an increase from last year. It's about an 11%, still under the 5-year average, but actually higher than the 10-year average. So we're definitely seeing a little bit of an uptick in terms of sales. Contrary to what the media might be saying and what we're hearing as well, amongst our sellers, buyers, things are actually selling. If a property is well priced, if it's presented properly, it will sell. Ottawa as a whole, we're only running with 3.3 months of inventory.
Now, it is very important to clarify that this is an average, right? 3.3 months of inventory in average. There are some areas and type of properties where that number is lower, significantly lower. Or much higher.
And also, like Shadi, actually, he sold a property in a certain area of Canada. And also, it's not just the area, it's also the price point. Mm-hmm. So certain areas of Canada and certain price points, like if you're between, say, 600 and 900 in Canada Lakes, your months of inventory is going to be, 2, 3. It's going to be fairly low. However, Shadi had a property that was listed at around 1.7 million. And in that price point, in that area, guess what? The months of inventory was huge. Like you could have had no new listings, and based on recent sales, it would have taken 10, 12 months, maybe 15 months to get all those absorbed. So what happened? Shadi got his clients $150,000, $200,000 off the asking price, right? So it varies completely. There's no one size fits all. And that's why we come out here and incorporate this as part of our market update, because it's very important to have these conversations, right, with your realtor, whether you're selling now, buying in 5 years, 2 years, 1 year, 6 months, doesn't matter. Have that conversation so we can kind of give you a good glimpse and kind of dive into your specific situation.
Everyone asks, how's the market? And our really good friend Dan Silhani said this word that really stuck with me. And the market is opportune. It's opportune for sellers and it's opportune for buyers, depending on that geographic location. And we also have other factors that are creating some sort of impact and softening the market, which is we understand that rates are likely to continue going down. So a lot of buyers are out there shopping, but with a real lack of urgency, because rates are likely to continue dropping. A lot of people tend to follow the wave, and you want to be ahead of that wave. One thing we repeat ourselves often is you can always renegotiate your interest rate. Of course, you may be locked for a few years, but you can never really renegotiate the purchase price of that property. So do not wait for the wave. Even if you're buying for a little bit higher than today, it's okay.
You want to be able to control that purchase price. You can control the rates. That's dictated by different factors completely external to you.
But you can renegotiate down the road.
Or you can blend the rate. Drop a message below if you want to hear about, blending rates and how you can take advantage of this. There's quite a bit of activity. It's not, I think everyone's kind of coming down from that craziness from the pandemic. I think even sellers, buyers are a little bit more accustomed to a slower pace market. Most sales have conditions in them.
Yeah.
You can
even in scenarios where there's competition, where there is multiple offers. Very rare. We do see certain properties selling firm, but we've seen scenarios where there's 5-6 offers and still sells conditional. And very rarely we will see that absurd over asking amount.
Yeah.
Because of course people are more restricted in what they could afford, right? And not only that, there's the qualification of buyers is more limited than it was a few years ago.
Correct.
So a different environment, of course, altogether. But again, anything well priced will sell, and even if it's well priced, it may take a couple of days. It's not going to sell in a day.
A couple of weeks
in some scenarios, and in some scenarios we do have properties that sit on the market for months, especially some apartments or higher price points. And when they do sell, they sell for we're talking 97% of the asking price, which is pretty good for the amount of days on market. It's just the pool of buyers for specific properties is just really minimized.
A few things to touch on. The rules changed for insured mortgages. Before, you could only insure a mortgage with CMHC, for example, up to $1 million, and also only have 25-year amortization. Now there's the new rules that came about where you can actually purchase a property with an insured mortgage up to $1.5 million and extend that amortization to 30 years. It's not always a good thing, because you do end up paying more interest if you amortize it for a longer period of time. However, if you're trying to get into a market, if you're trying to get into a specific price point, this might help you get in, and then you can make additional payments. You can accelerate your payments. You can put a lump sum every year if you want to pay it sooner. However, in terms of affordability and qualification, this is going to help quite a bit. Another tidbit, they're waiving the stress test for uninsured mortgages. So if you bought a property and you put more than 20% down and you're moving from, say, bank A to bank B, there's no stress test, which means that your qualification will be a lot easier, because typically a lot of people, bought a house 4 or 5 years ago at 1 to 2%, all right? And if you're qualifying now at 4%, your stress test, your qualification is not 4%. You're qualifying 2% higher than that, so at 6%, which would make it very tricky for you to actually go to a different bank. If you're staying within your same bank, the renewal process is a lot easier. It's fairly easy. It's very straightforward. But if you want to move and refinance at a different bank, that new bank had to qualify you under the stress test rules. So with an additional 2%, they're removing that for uninsured mortgages, which is great. It's going to actually, in my opinion, it's going to give us more options, more competition, right? Like you can get banks, you can get banks, you can get mortgage brokers to try and get you the best possible deal that fits your needs. So that's something very important. Lastly, October 23rd, it's the next rate announcement. Bank of Canada, it's going to dictate where the variable rate goes. Jen's been having a bet, with one of our great clients. They've kind of tied every single time here. Let us know what your predictions are. People are thinking minimum, anywhere between 50 basis points to 75 basis points. Who knows, right? But please drop a comment below. Let us know what you think is going to happen. And yeah, stay tuned for next time.
GoodStory.